On July 16, 2026, something happened in the crypto market that could change the way many people will view the crypto landscape. Citadel Securities finalized a massive $400 million strategic investment directly into Crypto.com. This high-profile injection officially anchors the platform at a staggering $20 billion valuation milestone. I am the digital avatar of Laurie McIntosh from Macintosh Digital, and in this video, we are going to provide a complete breakdown of what this means for the crypto market and how it could benefit Cronos token holders. But before we get started, I am not a financial advisor, and none of the information in this video should be considered financial advice. With that out of the way, let's dive in. This historic $400 million funding agreement marks a spectacular milestone for Crypto.com because it officially represents the very first outside institutional funding round in the platform's entire 10-year operational history. Since its initial launch back in 2016, the popular exchange has expanded almost entirely through organic retail growth, community adoption, and internal operational revenue. Bringing in a giant legacy financial market maker like Citadel Securities establishes a permanent bridge between traditional finance and modern digital assets. The incoming capital is specifically designated to accelerate immediate global expansion into entirely new asset classes, particularly targeting highly advanced tokenized securities and sophisticated derivatives infrastructure. Looking closer at the financial metrics, this substantial $400 million commitment mathematically values Crypto.com at exactly $20 billion. Interestingly, this perfectly mirrors the identical $20 billion valuation baseline that Citadel Securities utilized when deploying a separate $200 million investment into the rival trading platform Kraken back in late 2025. These recurring multi-million-dollar capital injections prove that Wall Street market makers are systemically setting a premium baseline price for top-tier digital exchange layers. By backing multiple platforms at matching multi-billion-dollar valuations, institutional entities are aggressively building long-term equity positions within the dominant trading frameworks of tomorrow. To contextualize this massive move, we have to look back at the broader institutional investment timeline. Citadel Securities has been methodically expanding its footprint across the digital economy for years, beginning with its co-founding role in EDX markets alongside Charles Schwab and Fidelity. Following that, they participated in a major $500 million funding round for Ripple, which valued that ecosystem at $40 billion. This latest step with Crypto.com signals a complete shift in corporate strategy. Instead of simply building institutional tools, Wall Street giants are directly buying large stakes in existing retail infrastructure to facilitate 24/7 global capital flows. The immediate market reaction to this institutional validation has highlighted a massive divergence between retail sentiment and smart money behavior. This $400 million development was announced during a temporary phase of macro retail anxiety, with BTC hovering around $64,300 and total market capitalization consolidating near $2.27 trillion. Even though short-term traders dropped the Retail Fear and Greed Index down to an extreme fear reading of 25, massive institutional players capitalized on the lower prices to aggressively fund infrastructural expansion. The smart money clearly views these minor retail corrections as the ultimate accumulation window. This profound corporate alignment has massive long-term implications for the Cronos token utility and ecosystem participants. As Crypto.com deploys these deep financial resources to construct institutional-grade, tokenized real-world assets and advanced futures systems, transactional demand on the network will scale dramatically. The Cronos token functions as the core operational fuel for the entire Cronos blockchain network, meaning that expanding commercial utility directly drives underlying ecosystem activity. As traditional finance shifts daily stock, option, and commodity settlements onto transparent public ledgers, the baseline transaction speed and daily utility requirements for the CRO blockchain are positioned for historic expansion. Successful modern investors navigate volatile market cycles by tracking exactly where big smart money is accumulating, rather than focusing on temporary retail price fluctuations. Multi-billion-dollar conglomerates recognize that secure network infrastructure always wins long-term, which is exactly why dedicated community education is so critical for individual traders trying to survive these shifts. Learning how major funds allocate capital enables you to align your personal portfolios alongside long-term macroeconomic trends instead of panic selling during brief dips. By educating yourself on structural cycle changes, you can stop reacting emotionally to short-term trends and start building wealth like a corporate entity. Taking immediate tactical action is the only definitive way to profit from this shifting financial landscape. And step number 1 requires total asset security. As sophisticated Wall Street corporations deploy massive sums into the digital ecosystem, protecting your personal holdings from external vulnerabilities becomes your highest operational priority. Every proactive investor should learn how to safely transfer their long-term token reserves away from standard exchange interfaces and into specialized, non-custodial hardware wallets. Retaining complete, uninterrupted ownership over your private keys represents the basic baseline for shielding your digital net worth, minimizing systemic third-party risks during volatile institutional expansions. Moving forward seamlessly, action step number 2 demands strategic account optimization alongside robust risk reduction methods. To maximize long-term stability on the Crypto.com app, users must actively implement automated tools like daily dollar cost averaging and precise stop-loss orders. Designing regular mechanical buying schedules enables you to balance out market swings smoothly without allowing emotional biases to interfere with your portfolio. Furthermore, practicing disciplined position sizing means you never commit more capital than your individual risk tolerance dictates. Taking strict control of these settings helps shield your capital against liquidation spikes during unexpected flash market fluctuations. If you want to position yourself for what's coming, make sure you join our Crypto Profit Boardroom, which is the place where people go learn how to safely buy, sell, and store cryptocurrency. Thank you for watching Macintosh Digital. Smash that like button, subscribe for daily market blueprints, and I will see you in the next video.